Morning, guys. So it is time to trade, new day, and I wanted to try something slightly different instead of starting with my portfolio. As some of you may know, I was running an experiment comparing dividend investing to options trading. And not just the speculative options trading, this is systematic options trading designed to have a high probability of making money. Now, a lot of people, they think options trading is extremely risky, and it can be depending on how you use your options. With great power comes great responsibility. I know it's overused, but I couldn't resist. Anyways, so now the important thing is when you're trading options, your risk levels are actually pretty similar to stocks. And if you manage your risk appropriately, you can keep your risk lower than stocks. Now, I don't know, you guys probably don't know, I used to be a dividend investor. When I first started investing, I was buying dividend stocks. Why? Because I love getting paid. I like to receive that cash, and that helps me be comfortable with holding a stock even if the price is going down, because I know I'm still going to be getting that check. And when the price goes down, at that point, I'm just like, yeah, I'm getting paid more, and I pay less in order to get that same check every month or whatever. So that is what drew me to dividend investing. I realized, hey, this is a really great way to build consistent income. Now it takes a lot of money. You have to save up a lot. You have to wait for prices to drop, and then you want to buy when it's low to lock in those higher dividends. And you also have to be careful. You got to do a lot of research looking into the stock's fundamentals. And so I was doing all of that. And then I discovered options. Now, the cool thing about options, you can receive that check kind of like how with a dividend. The difference is, instead of receiving it once every quarter, you can receive it once a month or once a week, however you want to trade it. I do it on a monthly basis, every 45 days. Now, the thing is, instead of just keeping that check, you are also putting up collateral. So you're just saying, hey, I'm going to guarantee the price of the stock for this. You're going to pay me this amount of money for that guarantee. I'm going to put up this collateral. At the end of the time frame, if the stock stays within a certain range, you close that trade and you keep the difference. And if it's more expensive, you lose the difference. Okay? That is how I've been trading options. Now, the risk level is the exact same as if you were holding stock. The only difference is when you buy stock, if it goes up, you're making money. If it goes down, you're losing money. With options, you can make money if the stocks go up, or you can lose money if they go up. You can make money if they go down, you can lose money if they go down. It just depends on your positions. It's more complicated. There's more nuances to learn. It's harder to learn. It's not as simple as just going in and buying a dividend stock. This is a skill set that you're building, and it takes a lot of time, a lot of effort. I personally have spent 5+ years now trying to learn this, building this skill set. So that's a little bit about me. That's how I got into options, was I realized, hey, I could complement my dividends with these options without increasing my risk. Initially I was just looking at cash secured puts. A cash secured put is the exact same risk as selling a covered call. The only difference, you're using less money, and you can sell at a lower price than where the stock's at. So if the stock drops, you're buying at a cheaper price, plus the money you collected offsets that price further. Now, as over time I realized options, in addition to having a similar risk level to stocks, if you're trading them conservatively and using a good system, in addition to having a similar risk level to stocks when used appropriately, they also require less money. Now, I'm not talking about buying options. Obviously, when you buy an option, it's going to be less expensive than straight up buying the stock. I'm even talking about selling options. The collateral that you're required to put up in order to sell an option is less than the amount of money you need to put up to buy a stock in cash. It's even less than the amount of money you have to put up if you're buying a stock on margin. Because if you buy on margin, you still have to put up half the money for the stock. And I do not recommend buying stocks on margin. Just FYI, I do not recommend that. Now, the margin required for options, completely different from the margin required for stocks. That is not money you're borrowing. That's money that you're required to have in your account in order to guarantee that option. Now, when I realized this, I realized options are just so much more efficient, and I decided to run an experiment. Now, I've been learning from Tasty Trade this whole time for the last 5.5 years or so. I've learned everything I know about options trading from them, but I wanted to run my own experiment just to prove to myself that these option mechanics that I've been using and learning from them actually do work and actually do require less capital for better performance than if I was just to buy a stock and hold it, even if I'm receiving that dividend. So, last month in February, actually it's April now, so a month and a half ago, around February, I think it was February 26th, I purchased 100 shares of AT&T stock in a simulator, one of those stock simulators, and simultaneously I took and put on this AT&T trade right here. So you've got T right here. I'm actually doing okay in it right now. Now, this was right before the market sell-off. I couldn't have picked a worse time to buy this stock and put on this trade, because both of these trades have about the same amount of risk. Okay? So, AT&T, I bought it for $37 when in the simulator, and I put on a strangle around AT&T at those same price levels. You can see right here, I've got the 37 put. Let's pop into the trade. I've got the 37 put. So this put is nearly 10, it's like $8 in the money right now. Let's pop over to the chart. I bought AT&T. I bought AT&T right about here for, about 37 bucks. Look where the price is now. Now, for a dividend investor, that's a dream come true, because you're like, hey, I can buy more, add to this position. For any other investor, including an options trader, that's a hard pill to swallow, because you just lost over like $1,000 in value on your 100 shares. So let's pop over to, I got the simulator pulled up. Look at that. That's $867 in losses. It hasn't factored in today's change yet. So $867 in losses. All right. And AT&T's down slightly today. 37.43 to 28.76. That is not a good trade, right? You bought it in 1 month, just boom, 23.16% down in a single month. Okay? But how did my options trade perform in comparison? Because I put this options trade on at the exact same time, and I've been aggressively managing my options positions to manage my risk levels and adjust my directional risk. Now, as you guys saw right here, so I've got $131 that I'm making here and $97 here, so it's net a $34 profit. If we pop in, you can see I've got a call that I've sold right at the 28. Now, when I placed the initial trade, I believe I probably sold like the 40. I probably sold like the 41 and the 37. Something like that. And as the stock moved down, I have been closing and rolling this to collect the profits on the call the whole way. Okay? What that does is that reduces my delta risk, my delta risk. So right now I've got negative 83 delta with this 37 call and positive 59 deltas. So I only exposed to about negative 25 deltas of risk right now. Or no, yeah, positive 23 deltas of risk. Because this is actually positive because I've sold one. So negative 1 times the negative 0.83 gives you positive 83. Negative 1 times the 0.59, that gives you a positive 59. Or negative 59. Can't do math. Anyways, so let's check out how much money I've lost on this position, my AT&T position, this year. So if we pop in here, we go down to T, and look at that. I've lost $449 total in my position. Compare that to, let's just pop back over, $867. That's a $400 difference. That's 40%, at least 40%, maybe a little bit more. That's a 40% difference in how much money you lost, despite the risk level being roughly the same. By selling those uncovered puts, those naked puts, my risk in AT&T is the exact same as if I bought those shares. Okay? The difference is I just don't own the shares, but I'm still taking that risk. Now I do have risk to the upside. If AT&T had gone straight up, I would have lost money there too. The difference is if I was holding those shares, I would have made that money. So, on paper. Anyways. So, now we are comparing the risk levels. There's a lot less risk and a lot more control when you're selling options to manage your portfolio and minimize those losses. And I can tell you right now, I'm going to keep trading this. So, I'm going to keep trading AT&T, and I'll provide some more updates in the future. But right now, I'm personally, I was very surprised when I saw this the first time, and this is the first dedicated video I've made to this specific topic. But this just reaffirms to me that I made the right decision by deciding to switch to options trading rather than just dividends. And I love dividend investing. It's still my second favorite style of investing. But for me personally, because I know how to properly manage my options portfolio, I've trained and developed myself so I can stick in there and continue trading even when the trading gets tough. So I know that my risk tolerance, I've built that up to the point where for me, I am comfortable with options and actually even realizing less risk, less total risk, like less actual risk than if I was buying those stocks, which is amazing. So I just wanted to get that out there because a lot of people, they think options is options, they just say, you know, those are just gamblers, they're just speculating. You can't really, like, it's just luck of the draw and stuff. It's not just luck. This is about math and probabilities, and this is about being able to directly control the amount of risk and exposure your portfolio has to the stock market. So, alright, that's all I got for you guys. I hope you enjoyed the segment. Sorry I didn't have very many cool visuals and I wasn't making any trades and clicking away or anything, but I really wanted to get this message out there that you can trade options, and sure, yeah, you're doing some speculation, but it's not just blind speculation. There's a system, there's a way to control your risk and even make it less risky than just straight up buying the stocks. So have a wonderful day, guys, and keep trading.